Opendoor finished Monday's session with a powerful move, closing up nearly 19% at $3.78 per share. For a stock that has been riding waves of both retail enthusiasm and institutional curiosity, today's session offered a fascinating glimpse into how momentum, narrative, and fundamentals are beginning to converge. Let's break down what happened, what was said, and what comes next. The day opened with explosive energy. Buyers pushed Opendoor quickly up toward $3.95, flirting with that $4 psychological barrier. That early rally grabbed everyone's attention, but as is often the case with fast starts, sellers stepped in and the stock pulled back. What was interesting, though, is that instead of collapsing, it settled into a very steady range between $3.40 and $3.50. It spent a long time trading in that pocket, and that kind of consolidation is often important. For many traders, it now suggests that $3.50 may act as a short-term support level, a base from which the next move could build. Then, as the final 90 minutes of trading rolled around, momentum returned. A steady wave of buying pushed the stock back up, and it closed the day at $3.78, just shy of its intraday highs. That closing strength mattered. It showed that despite intraday volatility, the bulls were still firmly in control by the bell. But the real story today wasn't just in the price action. It was also in the conversation happening off the trading floor. An interview between Eric Jackson and Anthony Pompliano dropped during the session, and it quickly spread through social media. For those who may not be familiar, Eric Jackson has become one of the loudest and most consistent voices advocating for Opendoor. He's been pushing the case that this is more than just an iBuyer and that it could evolve into something much larger, potentially the Airbnb of real estate. And in this new interview, he doubled down on that vision. Jackson outlined that his long-term price target remains $82. Now, he was clear that this is not an overnight prediction. He described it as a target measured in years, not weeks. But the reasoning behind it is what caught the attention of many investors. He pointed out that Opendoor's future isn't necessarily about holding vast amounts of real estate on its balance sheet. Instead, it's about becoming a platform. A place where buyers, sellers, and agents connect, with Opendoor acting as the trusted middle layer that simplifies and accelerates the process. In other words, moving away from being asset-heavy toward being asset-light, leveraging technology and data rather than simply sitting on housing inventory. That's where the Airbnb comparison comes in. Just as Airbnb transformed travel accommodation without owning vast hotels, Opendoor could transform real estate transactions without being bogged down by property exposure. That message resonated strongly with retail investors, who have been looking for a narrative bigger than just housing flips. Jackson also floated the idea that Opendoor might one day consider adding crypto to its balance sheet. It wasn't a central part of the discussion, but it was a comment that perked up ears given the overlap between the retail investor crowd and the crypto community. Even though the conversation didn't linger there, the hint alone suggested that Opendoor could align itself with forward-looking financial strategies, something retail traders love to hear. Another bold claim from Jackson was that Opendoor has surpassed Palantir as the most popular retail stock right now. That's a big statement. Palantir has been a darling of the retail crowd for years, but Jackson is arguing that Opendoor has captured the imagination in a way that feels even bigger. And looking at the activity on Reddit, X, and other online communities, it's hard to argue with him. This stock has become the talk of the town. Pompliano, for his part, added some interesting commentary of his own. He praised Opendoor's interim CEO for being active and hands-on, particularly in addressing platform issues and demonstrating a strong work ethic. That endorsement matters. Retail investors like to know that leadership is not asleep at the wheel. When someone like Pompliano highlights management's energy and responsiveness, it builds confidence that the company is not only surviving but evolving. And leadership decisions are clearly in focus right now. Earlier news confirmed that the planned reverse split vote has been cancelled. That's significant. Companies often lean on reverse splits as a last-ditch effort to regain compliance with exchange rules or to cosmetically boost a battered stock price. By cancelling that vote, Opendoor's leadership signaled that they believe the company is strong enough to stand on its own without that kind of intervention. It's a message of confidence, to employees, to investors, and to the broader market. Beyond management, the macro backdrop is another big part of today's story. Everyone is watching the Federal Reserve and the outlook for interest rates. While the Fed has held steady so far, markets are increasingly pricing in a rate cut later this year. September is the most talked about possibility. For the real estate market, that would be a tailwind. Lower borrowing costs could stimulate more housing demand, more transactions, and a healthier environment for Opendoor's model. Even if the cut doesn't come in September, the expectation that rates will ease at some point has already put optimism back into the sector. This is why Opendoor's surge today can't just be chalked up to retail hype. Yes, retail is pushing the narrative hard, but the underlying story of a potential real estate rebound is real. Institutions are watching closely. Remember, Paul Tudor Jones was reported to have a position in Opendoor, and while we don't know the size or the exact timing, the mere fact that his name is in the conversation tells us that smart money is at least paying attention. That blend of retail passion and institutional interest is unusual, and it adds fuel to the idea that this isn't just another meme run. Still, caution is warranted. Jackson himself stressed patience in his interview with Pompliano. His $82 target is not tomorrow, it's not next month, it's a long-term vision. Retail investors need to understand that while short-term moves can be dramatic, the company's transformation into a true platform will take time. Execution matters. Strategy matters. Market conditions matter. Today's rally was exciting, but it's part of a bigger, slower-moving story. As we look ahead to Tuesday and the rest of the week, there are a few key things to watch. First, will that $3.50 level hold a support? If it does, it could provide a strong foundation for the next push higher. Second, can the stock retest and break through the $4 mark? That psychological resistance will be an important battleground. Third, we'll be watching for any further communication from management. Updates on long-term strategy, leadership succession, or product innovation could all drive the next wave of momentum. Fourth, institutional signals, whether it's filings, analyst commentary, or high-profile endorsements, will help confirm whether this is becoming more than a retail-driven move. And finally, the broader market context. With Trump scheduled to meet Zelensky this week to discuss potential peace prospects in Ukraine, geopolitical developments could influence overall risk sentiment, even if indirectly. A breakthrough could ease inflationary pressures and strengthen risk assets, while setbacks could add volatility. To sum it up, today's session was a defining one for Opendoor. The stock didn't just climb, it showed resilience, it consolidated, and it rallied into the close. The Jackson Pompliano interview amplified the long-term bull case, painting a picture of a company that could be more than just an iBuyer, more than just a housing play, potentially a transformative platform in real estate. Management signaled confidence by canceling the reverse split vote. Macro tailwinds in the form of potential rate cuts are on the horizon. And both retail and institutional players are watching closely. For investors and traders, the key now is balance. Recognize the short-term momentum and the power of the retail crowd, but also respect the longer-term vision that will require patience and execution. This isn't an overnight story, but it is one that's capturing more and more attention with each passing session. Tomorrow, all eyes will be on whether today's gains can hold and whether Opendoor is ready to take its next step toward that $4 breakout.